Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from South Florida. Welcome back to the show, Rick.
Always enjoyable, Jim. Thanks for inviting me on.
Rick, the NASDAQ looks like it's going to set a new all-time high. What's behind all that?
Mental illness. I think that we have this huge rally going on, and there's such a disconnect that every day the pundits who are quoted in the newspapers and on mainstream media outlets are saying, well, investors are just kind of looking out ahead, and they think the worst is past, and that's a lot of bull. Because it's the one instance where we're sort of reading about these things, and we know as much as the experts in this case. They're saying we're all looking out ahead, but we know darn well ourselves that it's not going to be any time soon, if ever, that we go into a crowded movie theater or on a crowded airplane or on a cruise line or on a subway or on a train, on a bus, on a plane, you name it. So all of that infrastructure, and it totals hundreds of trillions of dollars of capital investment, it's going to have to be written off. I mean, maybe some people are starting to figure out that piece of the capital, every shopping mall in America, every movie theater, they're all teardowns now. Maybe some people are accounting for that in their reckoning of what the stock market should be, how high it should be trading. But for the most part, they're not. And as I put it in a commentary I put out this morning, it ain't going to end well.
Well, and also taking a look at all the companies that sent people home to work and have decided, Shopify and Twitter, saying, no, just stay home. We don't need you. And so obviously that leased office space, when the lease is out, they're not back.
Right. That's I didn't even mention that, but that's a huge part of the hit to capital that we're going to take. It will be, let's say, when you talk about infrastructure, you're referring to the entire city of New York, which has to be repurposed at this point. How many people are going to get on a commuter train and New York is, I hate to say this because they've survived so many other things, and that of course is the bullish case now, but New York's a dead duck. I mean, New York is where the reason for New York is because you have such density there of things happening, people doing things, the kind of ferment that really can't happen anymore. There's only so much that can happen on Zoom, really, but you've got a lot of wasted space if that's how New York proceeds.
And all those commuters who used to buy suits and women nice shoes and skirts to go to work, they're not buying that stuff anymore. And will they ever have to?
Yeah, the collateral damage is enormous. And, of course, anything at street level in New York, when people come down for lunch out of the office towers or whatever, it's going to die. And, as far as the clothing stores, whatever's left in Men's Warehouse that the looters didn't get, I was in a clothes store the other day, and it was the first time I'd experienced, the prices were pretty good, but it was the first time I'd experienced doing that, and thinking, well, just where am I going to be wearing this new Hawaiian shirt or whatever? Because even the social occasions that bring us out in better clothes they're just, everything's going to be different.
It'll be shocking when you see a guy in a jacket and tie. Like, you literally will be asking, who's getting married or who died?
Right. That's it. I think funerals that's about where you're going to see a blue suit anymore.
Because I remember my dad was a farmer and construction worker and worked in the trucking business. The only time he ever wore a suit was either a wedding or somebody's funeral, because, his work clothes are very practical. And if you work around your house, hell, who's wearing pants anymore?
Yeah, that is a problem, that's true. I put on I have a choice of putting on sweatpants shorts or short shorts every day, just regular shorts. But, I am, just, who dresses for anything anymore?
Now, I think people will still want to get their hair done and nails done because that's personal grooming, and you do have to look at yourself in a mirror now and then.
Yeah, it's true. I had one haircut. It was a week or so ago, and I came away thinking the guy didn't take enough off, because I'm not going to be inspired to get another haircut for a couple of months. But yeah, I think there'll still be barbers out there.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Rick Ackerman. Rick, with this kind of downturn and a change in society's attitude towards work, what should people be investing in the stock market? And is the stock market going to remain this optimistic, whether it's supported by the Fed or not?
Well, there's not much left to invest in. I mean, investors, they're all sort of jumping on the obvious with such reckless abandon that we've essentially got the 5 surviving companies in America: Microsoft, Apple, Amazon, Netflix, Google. The stocks have gone bananas. And yeah, you can think, well, if they're the only ones who are going to survive to do business in this country, we may as well own the stock. But even there, you're getting kind of ahead of yourself. Every investment story gets completely discounted within about 3 days. So we've got the really obvious ones like Clorox taking off because Clorox is the disinfecting future for America. So I don't know. I still think, and we've been talking about this for years, but I still think there's a play left in treasuries. I think rates are going to go lower, and of course, small downward movement in yields in the front end of the yield curve impact the distant end considerably. So I think there's still a good capital gains opportunity in bonds. And as for the rest of it, whatever else you invest in, I think it really has to be along the Peter Lynch model, where you'll recognize in your surroundings and the places you continue to do business with, the things that you need, you'll see the investment possibilities there. So I think that's what you got to do. You have to respond. You have to react instinctually to what seems to be working.
Will travel agencies, air travel, cruise lines, and so on, will they come back?
Oh, they're struggling so hard. But, you look at these giant cruise ships, and they had just, in the cruise business, they had just taken this quantum leap to gigantic liners, where there's like a glass wall on one side of the ship. And because there's this huge wall instead of steel, that side of the boat is lighter. So they've re-engineered the boat so that people can be sitting down below the decks and still have great views of whatever seas they happen to be sailing. So the cruise lines there's such huge overcapacity, and you get the promotions in the mail now, but they're not going to, no price is too low to induce people to come on cruises to the extent that they used to. So, that's one business that's going to be hurting, but the airlines too. The airlines are going to have to, everything the airlines have done for the last 30 years to pack us in like sardines has been geared to, just that, more passengers per square inch. They can't undo that model overnight. So they're going to have huge overcapacity, and it's not going to be easy to get people to pay higher fares that would be necessary to support lower, passenger rates. We're used to flying cheap, and it's been at the expense of giving up all the amenities that used to be there in flying. So,
sure. You used to get nice free meals and free soft drinks and blankets and pillows, and there was actually room for your feet. Now you're going to be paying almost business class prices to be in these econo seats where the table tray is stuck in your left eyeball.
Right, and we'll see who's going to win that battle, because it's not like the airlines are only competing against each other at this point. They're competing against Zoom and digital, video conferences and things like that. So that's going to be a very large competitive factor for the airlines.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, with crude demand down because of everything being shut down, and even with reopening, we're not expecting the same amount of commuter traffic. What's the future for crude oil?
It's dismal. There's so many producers. Most producers in this world can't produce profitably for under 40 or 45 bucks a barrel. So the idea that you can somehow get prices up to that level by curtailing supply, forget it. You need the demand to drive crude prices higher. And of course, with all this infrastructure I was talking about before, planes, trains, buses, and all that, the energy demands of the world are going to be much diminished. We've had such huge overcapacity in fracking output that a lot of frackers are going to go out of business, but not enough really to affect the kind of curtailment in supply that's going to push prices up. So it's worse than that, really, because the energy resources of this planet were hawked, that were leveraged out most extremely coming out of the 2008-2009 great financial collapse. Instead of hawking houses and building a vast paper pusher empire of derivative products that are thinly collateralized by some asset, namely housing, they look to the energy patch. So the huge overcapacity that we have in energy production right now is going to be one of the main sources of deflationary drag on the financial sector.
Is the U.S. dollar going to remain strong?
Yeah, we haven't really, at least in our conversations, we haven't deviated from that idea. there's no other currency big enough to take the place of the dollar for the big shell game that exists. The derivatives markets, most of the debt on this planet is denominated in dollars, and I just don't think that debtors are going to skip free with the benefit of inflation or hyperinflation. They're all going to get squeezed on the biggest piece of personal debt, which is mortgages. And as I keep saying, there will never come a day when we get to peel a couple of $100,000 bills from a money clip to pay off the balance of our mortgages. That ain't going to happen. So to the extent that mortgage debt is going to be repaid, that sort of puts us in a deflationary, not end game really, because at this point I'm finally willing to concede that all of the debt that's piling up that we know can never ever be paid the honest way, it's going to have to be paid through monetization. So I do see a government effective de facto default at some point on Treasury paper. It just has to happen. I just don't think we're going to the debtors are going to get emancipated before that happens.
With so much debt out there, are governments going to default and just say, well, that's it, we can't pay, we're going to start at zero? And can they do that?
Well, they're not going to get out there with a headline, the U.S. sovereign government, and say we're defaulting. It'll never be called a default. They may simply say we're no longer paying principal, just interest. So everybody will be holding whatever they're holding, and they'll collect a stream of interest with rates pegged wherever they are. And they have to be pegged low, of course, because if the government were servicing the $25 trillion in debt that's accumulated so far, anything more than the pittance that they've reduced interest rates to, they meaning we could never afford to pay it back. And we can't in any case. I mean, even if there's just a perfunctory nod toward we'll pay our debts, we'll raise taxes and all, you can imagine just trying to pay back a few of the trillions that they've shot out there in the way of stimulus, how debt servicing of that, even at very low interest rates, is enough to absolutely kill the idea that we're going to have some sort of economic recovery.
Are precious metals the way to go?
When you say the way to go,
like, should you be investing in them right now?
Well, it's somewhat fraught to say that it's the way to go. I've always been an advocate of holding a piece of what you have in investables in bullion, gold or silver. And the point that I've always made is, come hell or high water, bullion as an asset class will hold its value relative to any other. So yeah, maybe in the distance there's such a strong perception of hyperinflation that even mining stocks will take off. And on a valuation basis, I don't know how you can avoid some of these mining stocks. There's so much gold in the ground now, and of course their margins have greatly improved because all the labor and energy inputs have all decreased. So the gold stocks on paper, the miners and the exploration companies are looking great, and sooner or later that's got to get factored into share values. But anybody who's been waiting for that since 2011 knows that you got to have more than just a little patience.
Rick, how would you sum up what's going on right now?
Well, I think the stock market is contributing to the delusional idea that we're going to recover at all, or let alone have some V-shaped recovery. And I think people are really they're mystified by it, and there's uncertainty. Really, we may get more certainty on COVID-19 because we had kind of an orgy of escapement there, of sequestration over Memorial Weekend. And of course the riots themselves, ironically, have this there should be a little bit of a pandemic stigma attached to the lack of social distancing, if not masking, that took place in the looting of the cities. So people were pretty close, and they were breathing pretty hard. So if that doesn't produce a resurgence in the virus, it's going to raise some serious questions about why did we really have to shut down to the extent that we did. If we're seeing these huge episodes where we were super spreading like crazy, and look, nothing's happened. So I'll be interested myself to see how that plays out. And in the meantime, the worst of the economic data has been forestalled simply by a lot of government smoke and mirrors. A lot of people, a lot of companies are holding on to their employees because it's being financed by Uncle Sam. So the unemployment figures would be even worse if those programs were not in place, but they can't last forever. So I think that statistically and in reality, things are going to look a lot worse for the economy in the months to come.
Rick, thank you so much for chatting with us.
Well, thanks for inviting me on, Jim. It is always a pleasure to get together with you.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.